Dreams are for real. They push to make us hope, aspire, believe, persevere, achieve. Dreams make us better and make the whole world go round. This could be a story of you and me, if and when we find the right means at the right time at the right place. Banks and lending institutions are already working round the clock, transforming, consolidating, developing digitally, making credit accessible in smart, seamless, and secure ways, putting smiles on a billion faces. At Lentra, we empower lenders with tomorrow's lending ecosystem today. We are disrupting, we are transforming, we are building, we are leading with the complete cloud-native digital lending platform. We are democratizing credit through data-backed decisions, customer behavioral intelligence, and split-second processing and approvals. Welcome to the world of Lentra Lending Cloud, empowering lenders to fuel the dreams and ambitions of millions.
Good afternoon, ladies and gentlemen. It's an honor to welcome you all to our webinar on Early Warning System for Business Banking by Lentra. My name is Amrit and I will be your host this afternoon. Without further ado, let me begin with a summary of Lentra's storied journey. We are a cloud-native digital lending platform and we exist to empower lenders to fuel the dreams and ambitions of millions. And we've been doing it since 2019. And it is our constant pursuit of technology innovation, excellence, and client satisfaction that's fueled us to build an API-first, cloud-native, hyper-scalable platform. Now, this platform brings to life various elements like modular microservices-based and zero-trust secure architecture that is trusted by over 50 clients for who we've built over 16 loan journeys and helped build an ecosystem spanning over 250 fintech integrations and over 60 OEM integrations, all towards empowering our clients with instant credit decision-making and accelerated loan disbursement capabilities. Now, before we proceed to our next segment, there are certain hygiene things that I'd like to mention about this webinar. All participants have been muted by design, and for any questions that you may have, please feel free to write them in the chat window and direct them to the moderator. We will take these questions in a dedicated Q&A session, which is planned for the end of the webinar, where our experts will be more than happy to answer them. With this, ladies and gentlemen, I am privileged to welcome Rangarajan Vasudevan, co-founder and chief data officer at Lentra, to take us through the rest of the webinar. Ranga, as we fondly know him, is a 15+ year veteran in big data and machine learning, having founded and led the data team successfully from 2015 until its acquisition by Lentra in June 2022. He has degrees in computer science from IIT Madras and the University of Michigan, Ann Arbor, and he teaches a course on big data at IIT Madras as a guest faculty member. We are in your very capable hands now, Ranga. Take us home.
Thanks, Amrit. Thanks everyone for dialing in. It is Thursday afternoon, so things might be going a bit slow for you in the afternoon. Hope I'm able to actually pep you up with some really good topical material pertaining to the entire area around what happens after a loan is disbursed. But before that, let's get with the audio visual on the kind of impact that we're able to create with our solutions. Yeah.
Meet Sarah, a risk analyst at a leading global bank. Sarah's job has her manually consume and analyze terabytes worth of customer data from a variety of data sources and present the best credit risk plans to her higher-ups. Her life is a constant turmoil around to risk or not to risk. Meet Zane, credit risk manager at a leading bank. Zane's deeply involved with his team of analysts, figuring out ways to custom manage and plan for a multitude of third-party data providers. His life is a constant race against time to deliver consistent and reliable insights on risk profiles across his customer segments. Meet Kiera, Chief Credit Officer at the same bank as Sarah and Zane. Kiera is held accountable for the bank's inconsistent, risk-based classification of borrowers, rising gross NPAs, and absence of systems that could alert timely and reduce exposures. Presenting EWS by Lentra, an AI/ML-powered solution of the Lentra Lending Cloud that collects and analyzes data from any public or private data source, scores borrowers for financial distress based on a variety of leading indicators, with real-time credit risk assessment 24/7. Sarah can now analyze comprehensively enriched profile for every business entity. Zane can deliver fast, consistent results with turnkey automation. Kiera can enforce effective credit risk policies with a fully operational risk management platform. Up your credit risk mitigation game with EWS by Lentra today.
Great. So let's actually try to understand a bit about the problem statement itself in a bit more detail. While the video summarized what we do as a solution provider, it's important to look at what's changed about the problem statement in the recent past. First and foremost, ever since the pandemic has struck, I'm talking about COVID-19, there has been actually a significant shift in how the portfolio of lenders, especially as it pertains to the small and medium business segments, tend to look at. And that shift has happened because of a multitude of reasons, one of which has been the most important actor in town, which is the government, mandating that MSME revival is topmost priority as part of the post-COVID revival of the economic landscape. And this mandated lending to the MSME sector to be of a certain amount. There were lots of schemes that were extended as a result. One of the examples being the ECLGS, Emergency Credit Guarantee. So long and the short of it is that fast forward 2 years, and we now see that a majority of the lenders who have actually lent to the sector have faced a significant increase in NPAs, even compared to the already distressed levels at which many banks were operating even prior to the pandemic. So much so that one of the recent studies that was quoted actually had the SME sector lending, the NPAs associated with that sector to be as high as 16%, which is a whopping number, right, compared to what was happening before the pandemic. So what this meant at the end of the day was the ways in which you measure risk, the ways in which you measure the health of a business, and the continued creditworthiness of some of these businesses has to change. What applied before the pandemic struck is no longer applicable in this post-pandemic revival mode in which our country is in. So new risk assessment models are required, and that's the predominant challenge of the day. Now let's look at the next challenge that is there. Here we talk about the ability to actually look at risk from a perspective of data. Many banks do it. Many lenders are in the business of using data-driven decisions for especially things like creditworthiness and continuous monitoring. But what we've seen is that, especially for this sector, SME and mid-corporate sector, there is a plethora of data that has actually not been analyzed in a way that's systematic. So this stems from the observation that a lot of this data is actually residing in what's called as formats which are unstructured. Unstructured just means that a machine finds it hard to read. It's not that it's hard to read for humans or analysts, right, like you and me, right? Because we tend to know exactly where to look at in a particular document and exactly pick up which part of that nugget is essential for our decision making. But for a machine to be able to do that, requires a lot of handholding. And the more unstructured the data is, the more handholding or training is required for a machine. So we see that the problem statement of being able to look at this plethora of data, especially data that resides outside a typical lending institution, is predominantly unstructured. And that unstructured data has a lot of valuable information pertaining to business performance as well as the continuous operations of that particular entity. So till now, the ability to have machines trained on these unstructured data has been a challenge. But of late, especially with the kind of improvements that have happened in the broader AI landscape, this challenge is something that can be solved by taking these unstructured data elements and converting them to some elements of structured representation such that further decision making can happen. So again, the long and the short of it is that more and more data sets are being created, and a lot of it is being driven by the government again, because they've created these massive initiatives around Digital India, data.gov, etc. But at the end of the day, these are all unstructured. So the need of the hour is to be able to have AI-driven techniques which can go at it and bring that intelligence from these unstructured data and put it all together. So these are the two challenges that we have actually set out to solve. And we have done it at very large scale using the Lentra EWS solution. And in the next two slides, I'll give you examples of the kind of impact that we have been able to drive across two of the marquee lenders that we work with in India, which we've picked up as case studies. Both of these are very well recognized names, but I'll just talk about them in an anonymous fashion for the purpose of this webinar. So the first bank that we have done this work at is a bank that has close to a $50 billion portfolio across the SME corporates segment. And what we were able to do with the Lentra AWS solution is to achieve 100% coverage on all of the business accounts, all of the loan accounts actually. And this covers more than 120,000 plus corporates, mid-segment, micro segments, all of those types of entities. And these are getting monitored on a daily basis across multiple different types of trigger definitions. And what I mean by trigger definitions are, these are use cases which have been mandated by the regulator, RBI, that all lenders are supposed to adhere to, and to have effective systems to keep monitoring their portfolios for occurrences of these behavioral patterns. That's what we mean by triggers. Now, what used to happen before we got into the picture was these triggers were manually being generated. And as is always the case in many financial institutions, there's a lot of work that happens on Excel sheets and emails and people collaborating in front of a machine. So very similar thing used to happen in this particular bank as well. And what used to happen even more so was because the triggers were being operated on a manual basis, the ability for the analysts, the credit monitoring teams, the risk officers to go look at all the customer records, to go look at all the account information across all loan accounts was limited. And as a result, there was a tremendous amount of leakage that was happening. While the bank could not put a number around it, in studies that we were able to do along with them, once our solution went on board, was that close to 95% reduction was possible in the extent, to the extent to which automation was solving for this, compared to the manual ways in which the data was being processed. As a result, one of the flagship headline numbers that they reported in their FY22 audited statements was a 15% reduction in NPA. And most importantly, it helped them achieve compliance with RBI. But even more importantly, it allowed them to roll out even newer use cases, even newer forms of behavioral patterns that they were able to operationalize as triggers, going over and above what RBI had mandated. So it was a fantastic example of how they were able to leverage the Lentra AWS solution for the stated purpose of controlling NPAs. In the next slide, we will talk a bit about an example of another bank. So here, it's actually a public sector bank that we did a very good, interesting, project on. This bank is much larger in terms of portfolio, but nevertheless, the kind of impact that we were able to bring to them is significant. So what we did here was to look at a basket of 100 assets, and these assets were a mix of SME, mid-corporate, and large corporate. And we were benchmarking what we could do with Lentra's customer analytics platform called as Cadence against what the bank was doing with their own internal risk assessment and EWS solution. While the bank's own internal solution were able to identify 10% of the stressed assets in that basket, with Lentra's EWS powered by Cadence, we could get a 50% uplift on top of it. So we were able to identify 15% of the stressed assets. And this, the bank was able to backtest and do a thorough analysis and get that kind of validation that was required. So two case studies, one where there's an existing EWS and we were able to beat that benchmark with a 50% uplift. And in another, there was no existing EWS and we were able to completely change the landscape of how the bank was actually identifying NPAs. So let's talk a bit now about the solution itself. One of the, next slide, please. One of the critical enablers of how the solution is constructed is what we call as a single view of a business borrower. So here, the data sets that are corresponding to the borrower are extracted and collected from different sources, and they are merged together, integrating into a single borrower profile. And that single borrower profile is very much the core enabler, the foundation for the kind of early warning systems that we're building on top. So to do this, we leverage our Cadence customer analytics platform. Specifically, the kind of data that we're talking about cuts across all lines of businesses, all products and services that are availed of, both on the asset side as well as on the liability side. So I'm talking about products like CASA accounts, trade accounts, constant payments that the vendors end up making to their third parties through the banking ecosystem, information about their declarations as part of disclosures and compliances, both with the bank as well as with the regulator, as well as with the likes of MCA and ROC, but also crucially, information about public performance of the entity, both on the share market, if it's a publicly listed entity, but also in terms of their filings with the Ministry of Finance, the GST return filings, etc. So we were able to put together a variety of these data sets. As you can imagine, some of these data sets are external to the bank. Some of these are very core and internal to the bank. And our technology that underpins Cadence is able to extend ourselves to each of these different types of systems and bring that data in. As part of bringing the data in, we're also able to give that ability for the lender to choose how frequently these data sets are getting refreshed. And in many cases, we've seen that the incumbent system for risk monitoring is too slow, like was the case with that PSU bank that we spoke about. Their technology refreshed the data once a month, which is just not enough for the modern day lending cycles. So with our pipelines, on the other hand, we could actually have that be completely configurable, and we could choose to run it on a daily basis or intra-day basis, every hour, etc., etc. One of the other critical capabilities that we built out a lot of intelligence around is how do we identify related parties to the business borrower that we are tracking. And here, if I just build out the slide, there are three specific techniques that we've actually done a lot of work in. One, if the related parties are being declared by the borrower themselves as part of their onboarding. Then we collect that piece of information. Second, we look at data that is being collected on a regular basis as a result of filings with compliance authorities like MCA. But third, and even more importantly, we look at data that is being generated as a result of frequent transactions. And using that as the basis, we infer the relationship between borrowers and their direct. And this allows us to actually merge together multiple different types of data points, which kind of reinforce each other and provide the validation that's required in order to gauge whether somebody is a related party. As you can imagine, a lot of this is driven using machine learning. It's not just statically defined rules. And in fact, today, in a recent benchmark that we did, the ability for us to identify related parties is as high as 97%, at times even without any single bit of information available from external sources. And that's a tremendous value add. And we've seen this as becoming a very strong pain point for some of these incumbent-based homegrown systems which are tracking risk monitoring. Many lenders that we spoke to, they are of the view that today related parties are being tracked only based on a self-declaration basis, which is just not good enough, right? There are many cases where you would want to be able to have a system which can automatically detect this for you. Likewise, the other angles around what constitutes a business borrower are also augmented using machine learning. Like for instance, the ability for us to detect how much of a particular borrower's business is under stress. And that stress indicator is a machine learning driven scoring that we do. And that scoring is available as part of this business borrower profile as well. Likewise, there are similar trends that we capture as part of the financial information tracking. And these ratios, which are critical for you to understand how is the business trending over a period of time, etc. Those are getting automatically mined and analyzed and extracted for you, the user. So that is the foundation, like I spoke about, of the early warning system. Now, if you go to the next slide. Yeah, so here we then use the business borrower profile that we've constructed and then layer it with information about the kind of behaviors that we want to be alerted about. So to do this, we have a very specific machine learning driven approach, which we call as the transaction mining engine. A lot of the behaviors that we see are fundamentally business behaviors, and these are related to cash flows both in and out, as well as certain types of events which are very, very important for continuous risk monitoring. So let me take some examples. And in a later part of the webinar, when my colleague Narayanan is actually going to go through a demo, we'll show you examples of how these triggers will be materialized. But just to take a couple of examples to make the point, one of the critical behavioral data points that we get from the core banking system, which basically tracks all transactions in the CASA accounts, is the extent of cash handling that's happening. Now, the idea being for a typical above the board kind of entity, business entity, we would expect almost 98, 99% of their business to happen without requiring physical cash. And then there would be a model of how much cash is actually being used on a regular basis. Let's say it's between 1 to 2%. And anytime there is a deviation from that norm, gets tracked as an anomaly, gets tracked as a potential behavior that needs to be looked at or scrutinized in a bit more detail. So that's one example of a trigger. Then the crucial element that needs to come together for this kind of a trigger is the ability for us to look at all the transactions that happen over a period of time and look at the normal trend, normal behavior. There are ebbs and flows as part of that normal behavior. And then suddenly there's a shoot up because there is some extra cash withdrawal or cash deposit that's happening. And we want to be able to know about it and ask genuine questions to that promoter of that business entity, whether this cash was generated using legitimate purposes, etc. So that's one example. In the world of external data sets, or in the world of event-driven triggers, one of the very well-known events that RBI itself has mandated that every lender should be looking out for is a change in the auditor or the resignation of an auditor for a specific business entity. That is usually some kind of a yellow flag, right? Maybe not a red flag directly, but a yellow flag that requires you to look at why did that happen, and et cetera, et cetera. So bunch of different things happening within the transaction mining engine, which allows us to automatically generate close to 80 plus triggers today. And these 80 plus triggers have their own variants, right? Every trigger has multiple different variants. Again, my colleagues are actually going to show you some of the variants as part of the demo. Now, once these triggers are generated, and mind you, these triggers are being generated automatically because it's machine learning driven, right? There is the ability that the system has in-house, which will automatically decide which triggers are important and which triggers need to be suppressed. The example of why you would need suppression is because you might have just alerted the business to a specific behavior part, just maybe yesterday or the previous week, and it's still not enough time. Not enough time has passed by for the business to resolve that particular scenario. As a result, continuously alerting about the same trigger again and again on a daily basis is going to result in noise. And that invariably means that you would want to not actually burden the relationship manager or the credit officer, but allow them to focus on the trigger that's already been flagged for that behavior and help them close that particular behavior as being risky or not risky, and then moving on to other types of triggers. So the example here is, let's say that you're monitoring transactions over the last, let's say 3 months, and as part of that transaction monitoring, you find a particular behavior pattern which says that there is more than 10 different cases where the director is taking money out from the business. Now 10 could be an abnormal number, whereas the normal behavior is just 1 or 2 instances every month. 10 is a very large number of instances. And if you have already flagged that as a trigger, then when the next day's data comes in, there could be the 11th and the 12th event associated with the director taking money out, but it doesn't have any dramatic value for us to be able to flag the trigger all over again, because that trigger has already been alerted to, has already been fired in the previous day, right? So the business already knows that the director is actually taking a lot more money than is normal, and they have to act on it. And the system allows them to act on it and completely resolve that situation, and then flag newer instances of how the director is actually working with the money from the business. So that's an example, right? And these are very sophisticated examples that we keep tracking internally within the system. And what's most important with analytics-driven systems is not to just stop with analytics, but to take it to actions. Because without actions, this just becomes a glorified Excel sheet or a report, right? It's the actions that actually determine how the business gets to benefit from these machine learning powered intelligence that comes from the Lentra AWS solution. So what we built out here is an entire workflow capability, which allows us to go from trigger generation all the way through mapping what needs to happen for a relationship manager, who in turn has the capability to record feedback and also record certain types of comments associated with the feedback in order to address the risk, or in order to recognize and acknowledge the risk, as the case may be. And usually the relationship manager is in conversations with the promoter of the business, and then they come back with feedback, etc. So that's a very crucial step in the journey. And then once that is resolved to a certain degree, then the credit managers get looped in, and this happens automatically based on the organizational hierarchy. And then from there on, the credit monitoring team can optionally step in if additional levels of approvals or exceptions need to be handled. And at each stage, there are mechanisms available to collect more feedback so that the system continues to keep learning as a result of the machine learning algorithms that are running behind the scenes. And then finally, when the business decides that this particular entity, this particular loan account has to be flagged, then they table it in front of the EWS committee, and then further actions get taken as a result, right? So the workflow plays a very critical role in order to create actionable intelligence and build the actions and cover the entire gamut of the actions which are taken and record all of this in an audit trail so that you could play it in front of a compliance team, like for instance, the regulator coming in and checking on your system. And you could also get the satisfaction that you need in terms of knowing for sure that every single event, every single account, every single trigger is accounted for in the system. So that in a nutshell is the Lentra EWS solution. With this, I'll hand it back to Amrit. I'll be hanging around for questions once the demo is done as well. But back to you, Amrit.
Wow, that was deep. And as Ranga was walking us through his entire narrative about EWS for business banking by Lentra, somehow in my mind I kept thinking that maybe I should attend Ranga's lessons in IIT Madras. Now we've come to the question and answer segment of our webinar. But before we get there, I would like to have all our audiences participate in this poll that we've created. And in the interest of time, we'll reserve about a minute for you to respond, and post which we can commence to the Q&A segment. So your polls coming up right now. All right, ending the poll now. Now I have seen a couple of questions that came our way while Ranga was presenting, and Ranga seems to have answered them in the Q&A section of Zoom already. There are a couple of other questions that came our way, and I'd like to pick them. I'd basically like to pick and choose from them. So the first question on that front is for you, BN. You talked about EWS committee and credit monitoring team. So what kind of an interface do they use to carry out their actions?
That's a good question, Amrit. I think the interface they use is absolutely the same. It's just that the data and the level of processing of the data which comes into the screen varies. So let's take an example of a credit manager who would be, say, number 2 in the workflow, right? So the relationship manager would give their views on the trigger which is raised. Mm-hmm. With those views, a trigger which is marked as suspicious would then go to the credit manager, and the credit manager will have the ability to add their point of view to it. If a trigger is marked non-suspicious, even that will go to the credit manager. The credit manager has an option to reopen the trigger, right, and say that no, I do not agree that it's not suspicious, right? So the whole idea being to bring out a risk out into broad daylight, right, and share it across the organization, and have various people involved with that customer collaborate to mitigate that risk.
Understood. I hope that answers this question. There's a follow-up question to this, and it's all. It seems that someone was reading my mind. So, how does your system control for quality and quantity of triggers?
Yeah, so I think, like I mentioned, the ability for the system to understand which are the parts where the triggers have already been raised are encapsulating newer forms of incrementally generated data or incrementally generated triggers. That's part and parcel of the EWS solution itself, meaning we take stock of whether the behaviors themselves have changed. And if they have changed, the first time the change occurs, the trigger gets triggered, the trigger gets generated. And then if that change in behavior is consistent, then there isn't any change in change itself, right? So we don't need to generate a new trigger. The existing trigger plays out and the resolution for that happens. And accordingly, the new changes of behavior get controlled for. The other angle which we use, which we acutely emphasize when we talk about the quality of the triggers is that there is constantly the feedback that we collect as part of the trigger resolution mechanism. So that's the part that BN also showed the demo. In fact, he had typed in the words as well, right? So as part of that, we get that feedback not only for storing this as an audit trail, but also as a way for our machine learning to learn. And that allows us to keep making the system more and more accurate over a period of time. So that's how, those are two examples, I would say, which are sophisticated ways of controlling for the quality and the quantity.
Understood. Understood. There's another question coming your way, Ranga. So hold your breath. So can branches set their own trigger agenda as opposed to central monitoring?
Absolutely. Yeah, absolutely. In fact, that's one of the big advantages of our platform-led approach. You could actually set the trigger thresholds
by borrower.
Yeah. Right at the borrower level. We want to.
Yeah. So we can set the trigger threshold at LOB level, at industry vertical, at branch, and right down to the borrower level, and then map it out, right? So it's set at borrower level, you map it to the RM, you map it to the branch, and that's how it works, right? So that's the level of control which the Lentra EWS allows their users. And we feel that nuanced control, right, is very, very, very important as the system evolves.
Understood. Understood. Thanks a lot. Thanks a lot. There's another question, and this one, I mean, either you, Ranga or BN, you could take this. So do we have to, so basically, do banks have to give you the list of related parties, or does the solution find out by itself? Does it discover them on its own?
Yeah, that's a good question. So what we have seen is that in most cases, the companies that declare related parties, be it a self-declaration form or the compliance filing with the MCA/ROC, is on the conservative side, right? They just declare the directors as related parties in most cases. But what we are able to find out is actually much more than that. And that is a process of analyzing the core banking data, analyzing various other data sets that are there inside the bank. And that is something we do automatically. We don't need any manual inputs for doing that.
Right. Wonderful. So I have time for just one last question. Now this, okay, this question reads, for regulator triggers, which all public data sets do you have already? So basically, do you work with predefined data sets, or how does that work?
So the design of the EWS is to take in new data sets as they emerge, right? So EWS can take in something new comes in tomorrow. Say, for example, somebody is aggregating information from social media and sending it out to us. Immediately, we can build the data model for it and take it into Cadence. However, all the usual data sets, that's MCA, ROC, EPFO, GST, right? All of these sets are already integrated. And all of them are contributing to several of the use cases and many of the triggers.
Wonderful. Wonderful.
I think just to add to that, the public data sets are actually a few as well, right? Like for instance, public means open to access by anybody, and in that sense, we also have data from the share market.
Yeah.
Right. We also have
Stock
data about
prices,
financial ratios, prices,
legal cases,
etc. Yeah.
news.
News is actually a very, very important data set. Like for instance, one of the triggers that we have is the ability to detect a change in auditor, or the fact that there has been a raid by IT or enforcement directorate on a particular entity or a branch or a representative office.
Even the overall news sentiment score, right? As articles containing description about the particular borrower of interest come, we take it under the model which scores it over time.
Nice. Thank you so much. I guess we have drawn to a close of this webinar, and with this, I'd like to thank all the audiences for spending time with us, for allowing us to showcase our EWS for business banking capabilities. We will be publishing this webinar for you to consume as an on-demand asset at some point of time, either today or tomorrow. And yeah, thank you and God bless.